Imagine waking up one morning and the cash in your wallet is worth 30% less than it was yesterday. Sounds scary, right? Sadly, this is reality in today's world of inflation, economic uncertainty, and volatile markets. But what if I told you there are safer ways to grow and preserve your wealth than just holding onto cash? In this video, we're going to uncover 6 assets that are safer than cash. Assets that not only protect your wealth, but can potentially grow it over time. And by the end, you'll know exactly where to park your money smartly. So buckle up, because this is a financial survival guide for the modern era. Asset number 1, high-quality bonds. Meet Sarah, a 34-year-old teacher. She wanted safety, but also a small return. She started buying high-quality government bonds. Fast forward 5 years, she didn't just preserve her money, she earned predictable returns without losing sleep over market crashes. Key points. Government bonds, municipal bonds, and high-grade corporate bonds are considered low risk. Historically, bonds provide stability even during economic downturns. Source: where U.S. Treasury, Investopedia. Types of bonds: short-term versus long-term, inflation-protected, TIPS, and their benefits. Asset number 2, gold and precious metals. In 1971, when the U.S. left the gold standard, many feared their dollars would collapse. Those who invested in gold during that period watched their wealth survive storms of inflation. Gold has been a safe haven for centuries. Key points. Gold is globally recognized, finite, and historically preserves value. Silver, platinum, and other precious metals also serve as wealth hedges. Tips for buying: physical bullion versus ETFs, storage, and authenticity. Asset number 3, real estate. John bought a small apartment in 2005. Over the next 15 years, even as the economy dipped and stock markets crashed, his property not only retained value, but also generated rental income every month. Key points. Tangible asset, inflation hedge, passive income source. Types: residential, commercial, REITs, real estate investment trusts. Risks versus safety, location, liquidity, and maintenance costs. Asset number 4, dividend-paying stocks. Meet Lisa, a young investor who doesn't have time to trade daily. She started buying dividend-paying stocks from reliable companies. Every quarter she received cash, a steady stream that continued even when the market dipped. Key points: dividend stocks give consistent returns and growth potential. Focus on established companies with strong balance sheets. Blend of safety plus growth. Blue-chip companies often outperform inflation. Asset number 5, inflation-protected securities and treasury. Inflation-protected securities, TIPS. David was worried about inflation eating his savings. He discovered TIPS, securities that adjust with inflation. Unlike cash, which loses value, his money actually grew with the rising cost of living. Key points: TIPS are government-backed, low-risk, and inflation-adjusted. Protects principal while keeping pace with inflation. How to invest: brokerage accounts, mutual funds, ETFs. Asset number 6, diversified index funds / ETFs. Emma, a software engineer, didn't have time to pick stocks daily. She invested in a low-cost S&P 500 ETF and let it ride. Decades later, she not only beat inflation, but also enjoyed wealth growth without constant stress. Key points: diversification reduces risk, historically outperforms cash over long term. Low-cost index funds are safe for long-term wealth preservation. Example: S&P 500, total market index funds, global ETFs. Putting it all together, the safety portfolio. Imagine your wealth as a fortress. Each asset is a layer of defense. Bonds and TIPS protect against volatility and inflation. Gold shields against market crashes. Real estate and dividend stocks create passive income. And diversified ETFs grow your wealth over time. Together, they form an unshakable financial foundation. Key points: suggested allocation strategies for safety-focused portfolios. Importance of risk tolerance, emergency fund, and rebalancing. Using professional advice versus DIY investing. Conclusion: cash alone may feel safe in your pocket, but history has proven it's one of the riskiest ways to store wealth. By diversifying into these 6 assets, bonds, gold, real estate, dividend stocks, tips, and index funds, you can protect and grow your money no matter what the future holds. If you found this video valuable, hit that like button, subscribe, and turn on notifications so you never miss financial insights that can safeguard your wealth. Also, comment below, which of these 6 assets would you start investing in today? I'd love to hear your strategy.